If you think silver is just a sleepy metal that wakes up once in a while, you're about to see why that's the wrong way to look at it. Right now, silver is being pulled in three directions at the same time. One is fear, one is factories, and the third is politics. When those three start pulling on the same rope, the snap can be violent. Before we connect all the dots, comment below what day and date you're watching from. Now let us get into what actually matters, because markets right now feel like they were holding their breath. Stocks rip one day, dump the next. Bonds stay calm until they don't. And metals? Half the crowd is calling a top. The other half is quietly saying, this hasn't even started. Gold is simple. People buy it when they don't trust the system. Silver is not simple. Silver is a store of value and an industrial necessity. You don't just lock silver in vaults. You burn it into solar panels, electronics, sensors, medical equipment, industrial systems. Silver actually gets used up. That creates a tension most investors miss, because while gold mostly sits still, silver disappears into products. And here's the critical part. Most silver is mined as a byproduct of other metals. So if copper or zinc production slows, silver supply tightens, even if nobody is bullish silver. That's how pressure quietly builds. People say, they'll just mine more. But mines don't turn on like light switches. Permits take years. Capital takes time. Politics slows everything. Supply cannot respond quickly. Demand can. That imbalance matters. Silver is tiny compared to stocks, bonds, or even gold. So when new money shows up, it's like stuffing a crowd into a small room. That's why silver moves feel sudden. That's why rallies feel explosive. And it's not just futures traders. When physical buyers step in, coins, bars, retail stacking, availability tightens fast. Global price says one thing, street price says another. When those diverge, real-world demand is speaking. Does that guarantee a rally? No, silver can still get slammed during liquidation. But it explains why silver goes from ignored to center stage overnight. Because when silver turns, it turns hard. Industrial silver demand is pushing toward record levels. Solar is doing heavy lifting. Even when manufacturers try to reduce silver per unit, total usage keeps rising because the world is building more electrified infrastructure. Silver has split personality. When fear rises, treated like money. When economies build, treated like raw material. That's why price action looks strange. It sells off when you expect rallies. It rips when you expect rest. Not a straight line. Chop, pullbacks, mean reversion. But the demand picture is structurally different than years ago. Here's where things get interesting. AI isn't just apps and algorithms. AI is concrete, steel, transformers, data centers, power grids, cooling systems, Itadian warehouses of servers. This is physical infrastructure. Hundreds of billions are being poured into building it. That spending spills into energy industrials, materials utilities, not just tech. And here's the twist, nobody prices correctly. This kind of build-out is inflationary in the short term. Tight labor, tight equipment, energy constraints. You can have automation lowering costs in some areas while physical inputs get more expensive. Silver sits right in the middle, electronics, connections, solar. Tiny amounts per unit, massive volumes overall. This is why silver is not just a precious metal. It's a supply chain metal. And supply chain metals don't behave politely when the world builds all at once. Now zoom out further. AI hardware needs magnets. Magnets need rare earths. Rare earths need processing. Processing is geopolitics. Most of that processing has been concentrated in one place. That creates leverage. Governments now treat minerals like strategic assets, stockpiles, alliances, domestic supply initiatives, not because it's trendy, because these materials can stop the machine. When supply chains look fragile, investors pay up for anything tied to security. Defense, domestic producers, gold, and often silver, because it's smaller and moves faster. Even landfill mining is entering the conversation. Old electronics contain the same materials we now claim are scarce. AI vision systems and robotics are being used to recover them. AI helping build AI. Recycling won't replace mining overnight, but it can pull future supply forward. And all of this feeds back into silver. Solar doesn't care about macro narratives. Data centers don't care about emotions. They care about metal. Rates shape everything. They shape the dollar, they shape credit, they shape infrastructure spending. Markets are now wrestling with potential rate cuts on the short end, sticky or rising yields on the long end. That's curve steepening. But steepening isn't always bullish. Sometimes it means inflation fears, bigger deficits, investors demanding more compensation. So don't assume rate cuts automatically send metals higher. Belief moves faster than policy. Markets move before central banks act. Volatility doesn't wait for permission. That's why trying to trade headlines usually fails. The goal isn't winning the next meeting, it's surviving the next cycle. Here's the uncomfortable question. What if all this spending doesn't deliver profits fast enough? Markets don't run on hype. They run on earnings. If returns disappoint, stocks get punished. But silver still gets used. That's why silver is strange. Its industrial demand continues even if tech stocks struggle. It lives in both optimism and fear. So ask yourself, are you trading headlines or positioning for cycles? Because silver rewards patience and punishes impatience. Think of gold as a cruise ship. Silver as a speedboat. Gold turns slowly, silver flips fast. That's why silver feels disrespectful, long, boring periods. Then sudden chaos. Most people get shaken out right before the move. The ones who survive treat silver as a position, not a lottery ticket. They size it properly. They expect pullbacks. They stay humble about timing. Silver doesn't care about predictions. It cares about pressure. And right now pressure is building from industrial demand, AI, infrastructure, mineral bottlenecks, geopolitical risk, uncertain rate policy, not one headline, multiple forces stacking. So here's the real question. Will silver move? Of course. The real question is, will you still be there when it does? Build positions you can hold through noise. Don't bet your future on a single call. Stay flexible. Stay patient. Because silver doesn't announce its breakout. It surprises you.